So shares in alternative asset manager Blue Owl Capital closed almost 8% lower after announcing it would curb investor liquidity along with the sale of $1.4 billion in loan assets. Investors will now receive periodic payouts from Blue Owl rather than the regular quarterly payments it had originally set out. The sale of loan assets, which amounts to 30% of its total assets, will be used to pay down debt and return capital to shareholders of one of its funds. Now, the news has sparked fresh concerns in the world of private credit, sending shares in Blue Owl's peers low in US trade. Barbara, I just think it's fascinating because, again, and quite rightly, your members, they're ahead of a lot of these trends and they're aware of a lot of the other trends. And one of the trends has been to get private investors, retail investors, high net worth investors into the private credit markets that might previously have been the domain of the VCs or the private equity partners and what have you as well. What are your thoughts about already seeing, not so much an implosion, but certainly a very difficult period for one of the key names in private credit?
Well, and we were all invested in private credit as well. And now, as I said, we are looking at gold and silver because those are predictable in terms of staying power. We see central banks buying gold now. They're dumping their yen and euros and dollars, and governments are creating too much money. So they're all holding hard assets like gold. So we pivot when it's the right time to pivot. This is why we have a market opportunities and risk call every month. Our members get together with some of the top minds in the financial services space, and they are members as well, and they give us direction on what they're doing. People are buying silver now because data centers have to use silver. We think it was a little overvalued, but we were there for the ride as well. So we think that their hard assets right now look good, and we have been invested in them for a while watching this growth.
I'm sorry, just allow me one more question. So your investors were invested in private credit, but they now just see it as not the right place to be. And you mentioned all those other areas. So they just don't like private credit at the moment.
Not as much. So I think that there's more focus on the more predictable, stable areas like gold, silver, defense stocks at this point.